Welcome to this edition of the best stocks to buy now for February 2014. And in this quick video, we're going to go over 3 stocks that have had recent pullbacks that make great buying opportunities right now, and 2 other stocks that might trade lower over the next few days that could lead to a great buying opportunity. So the first thing we're going to discuss is Apple. I will say that, full disclosure, I am long Apple. I do have an active position in this company. And recently they dropped from about $560 to $500 after reporting earnings. And I thought the quarter was really strong. It didn't really make sense for the stock to drop so much. I think it was definitely an overreaction. And as you can see, it's already recovered into the 530s. However, Apple recently bought back $14 billion of its own stock after this earnings report. That's within the last 2 weeks, and this is reported in the Wall Street Journal. And if earnings per share are to stay the same, then the buyback was worth about $15 a share. So you can see the recovery into the 530s is really into the about 515 to 520 as compared to the price before earnings. It's still a solid pullback from 560. So I think this makes a great buying opportunity. I think that Apple's quarter was solid. They produced record sales, even if the margins came down a little bit to keep earnings flat. And really, this strength of Apple is that they're just making so much money that they can just keep continuing to buy back their own stock. So they bought back $14 billion this time, but I mean, they made almost $10 billion last quarter, or at least after paying out the dividend, that is. They made over $10 billion, but they had to pay out a dividend. So they can just keep buying back stock like this as long as the money's coming in, and there's no reason to think that it won't. So another stock I like is right now is Popeyes, and this was the second stock I picked for the How to Invest HQ portfolio. So yes, I am long in a small position, but I did buy this month. I think that this month it's particularly a good buying opportunity. I mean, they do report in a week, so that could change. If the price goes up a lot, maybe it's not going to be such a good opportunity. But if it stays the same or even goes down, it's an excellent opportunity. And the reason I like Popeyes so much is because it's down over 30% from its IPO due to nothing other than people just aren't interested in it anymore because the IPO is over. People bought in the IPO, they bought it up a lot, went up to $34, and now it's down to just around 21 to 22 for no reason, just the people, that were riding the wave got off. So now it's ready for the regular investor to enter, and I think this is a great company. It's a fast casual company, makes sandwiches and subs, and they only have about 300 locations. And half of these are in just 3 states. Illinois has 80-some locations. Texas has almost 50. So between just 3 states, there's 150 locations. There's an enormous potential for growth just within the United States alone. And I also really like this company, not just because I think they can grow a lot, but because their stores are very profitable. They produce about 20% profit margin, which can be used to fuel further growth. If you look on the earnings sheet, it's not going to show any earnings, but that's just because they're taking that money and they're putting it into new locations. So as long as spending on infrastructure is high, of course total earnings are going to be low, but the actual profit margin of pre-existing stores is solid. So another stock I really like right now is Amazon. And the reason I like it so much is I've always liked Amazon long. I think that, they're going to continue to keep growing revenue by 15-20% a year. And, they've got a lot of great businesses. E-commerce is continuing to grow by double digits. Amazon rules e-commerce. But not only that, they have the Amazon Web Services. They have the foray into video. They have the whole membership thing with Amazon Prime. They sell ebooks. They've got a lot of high-end, high-margin digital products. Like the books, the video, the audio books, all that stuff is great. And I think it's just going to continue to grow. It's in line with the way society's headed. It's just a good company. So when you get a 10% pullback for no particular reason other than a falling short of earnings, it's a great buy. And the reason that this is a good buy, even though earnings were short of expectations last quarter, it's because Amazon doesn't need to generate earnings. They just need to grow revenue, and they grew revenue fine. Amazon's goal right now needs to be to put all their money back into their business, get up new distribution centers, get shipping costs down, make it easier and faster to ship products everywhere in the United States, and abroad too, in the countries that they're getting a good foothold in, like the UK and Canada. So as long as they continue to do that, they continue to grow their digital services, they're in a good spot for investing, and they definitely did that this quarter. So now I'm going to discuss 2 tentative purchases. One is Zillow. It's a real estate website. I think that they're, a true industry disruptor. They're really changing the way people buy and sell houses and even look for apartments online. Really, everything to do with real estate is being completely changed by Zillow and websites like it. And I think that the actual real estate industry itself just hasn't quite caught up to Zillow yet. More and more real estate agents are getting on there to market properties and market their own services, and that's driving up, ad revenue. But as more and more people start using their service and more people involved in that industry start using that service to actually as a primary way of doing business, we're going to see an explosion in ad revenue and profit shares for whatever listing fees Zillow might charge or might begin to charge for featured listings. So there's definitely plenty of room for growth here. And the reason it's a tentative buy is because they report earnings today. And if they miss for the quarter and have a big drop, I am in there for sure. And the reason that it's hard to say what's going to happen is because internet traffic goes up and down. It trends a lot. Ad spend can go up and down. It's very hard to predict accurately how much they're going to make. So they could easily blow away earnings and they can easily miss earnings. So when a growth stock that's trading as highly as Zillow misses or hits and does well, its price is going up or down 10, 5, 10, 15, 20% in a day. So it's hard to say that, what's going to happen. If you want to get in before earnings, you can, just in case, it does do well and goes up 20%. But the only thing is that is, if you are going to buy today before earnings, you have to be prepared to buy again in a week after earnings come out, just in case it's a big drop. And if you wait for the big drop and it happens to drop, then it's definitely a good buy. Similar tentative buy is Proctor Gamble, and it was down today on news that currency volatility and the Venezuelan government sanctions will hurt their ability to make money this quarter. They lowered their total guidance. They said they're not going to make as much money, but really neither of these is a long-term threat to the company. So any dip represents a buying opportunity. Whatever quarterly dip happens, it's going to be gone. This currency volatility and a sanction from a certain government that's going to cost them $300 million, that's not necessarily guaranteed to be there for the long term. So the reason I like this is because Procter & Gamble has already pulled back nicely from December highs, and if it trades any lower, it's about 2% down at open today. If it can go, another % down, I think it's a good buy. And I'm a buyer at $76 a share, and I think it's a strong buy if it can hit 75. We haven't seen 75 from this stock in a long time. So if it happens to tick down to that level, I think it's a great buy. And even at 76 is a pretty strong buy too. I think right now it's around 77. It's still a good buy there. Just because, like I was saying, they were up in the 80s in December. And this is a steady company that usually doesn't have too much volatility in price. They've been putting out great dividends for a long time, slowly growing revenue. To be able to get in at any sort of pullback is a win, I think. And that's it for this edition. You subscribe to my channel, and each month you'll get updates as I post new information on how to invest HQ portfolio, as well as more buys for the next month.